Tempus AI got attacked by a short seller this week. When the short report came out, the stock took a hit around 20% or so, but as you can see, for the year, the stock is still up 58%, and even over the past week, the stock is only down 8%. Over the past month, it is flat-ish. Over the last 3 months, it's still up 6.9%. Tempus has a market cap of $9.2 billion. So, what exactly has gone on? Is that short seller report actually something that you have to consider or not? Well, first of all, let me start by saying that Tempus AI got a lot of attention, not because of their business, not because of their ticker or anything like that. No, it got a lot of attention because Nancy Pelosi took a position in Tempus through options. He had a call, I think $20 or so, if I remember correctly. Now, Tempus AI is a company that is already quite big for the amount of revenue that they're generating today. Market cap of $9.2 billion. Yes, it is a company that is, of course, growing quite rapidly. It's also a company that is still unprofitable. Just so we're clear at what stage this company is still at. So, let's go over everything you need to know. I already covered Tempus a couple of times on this channel. If you want to learn more about that, links will be in the top right corner, or just search Tempus on the channel. If you enjoy this type of videos, hit all the buttons, especially the subscribe one. Really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. All right, so first up, quick company background for Tempus AI and Spruce Point. So first up, Tempus AI, which by the way was formerly known as Tempus Labs, which is also one of the points that they make, but okay. It's a Chicago-based healthcare technology company specialized in AI-enabled precision medicine solutions. It develops diagnostics by applying AI to connect laboratory tests with patient clinical data, aiming to enable data-driven personalized patient care. The company went public in June 2024 at a $6.6 billion valuation, backed by major investors such as SoftBank, Alphabet, and Cathie Wood's ARK. The short seller, in this case Spruce Point Capital Management, a New York-based firm focused on forensic research and short selling, released a report titled "The Tempest Surrounding Tempus AI," expressing a strong sell opinion. The report predicts a 50 to 60% downside risk to Tempus AI's stock price, estimating a range of $26.3 to $32.9 per share. So, first up, Tempus AI, the business. In summary, really short here, you've got the genomics side of things, so diagnostic testing, run test and bill insurance or be paid directly. Then you've got the data side of things, so licensing and analytical tools. License, de-identify multimodal records and software tools to analyze and derive insights. And then you have here applications, the smaller side, therapy and trial matching, develop algorithmic diagnostics such as matching patients to clinical trials or closing care gaps. And last quarter, this is basically how they generate revenue. The majority of their revenue comes from the genomics part of the business, and then you've got the data and services revenue. So revenue overall increased by 75.4% last quarter. And as you can see, we've seen an acceleration in growth, mostly coming from the genomics side of the business. Now, let's go and have a look at the short seller report. This is a summary of the main points. So first up, we have dubious leadership history. So the founder and CEO and associate have a history of promoting disruptive tech companies, for example, Starbelly.com, Groupon, Inner Workings, that faced financial scandals, bankruptcies, or restatements, often leaving shareholders with losses. Insiders, including the CEO, sold $190 million in shares post-IPO in February 25, raising commitment concerns. Speaking of insider buying or selling, we can look at the insider activity right here. Number of open market buys, number of sells, and so if you look at the total insider trades over the past 3 months, 40 trades, over the past 12 months, 145. Here you can clearly see that the net activity is, well, that there has been more selling than buying. Going back to those previous companies, Inner Workings, for example, well, first of all, this slide looks like it really came out of 2007. Now, the fact that they have to go back to January 2007 and November 08 to show us this point that they're making here. So Inner Workings was a hotly promoted technology company controlled by the current CEO that IPO'd in 2008 at $11 per share. Eric Belcher, the audit chairman, was COO, later CEO and chairman, and Temp's other audit committee member, Peter Barritz, was also a director at InnerWorks Audit Committee. Looking carefully, we see how they promoted their PPM4 technology pre-IPO as sexy and sleek. 2 years later, the technology interface looked dramatically more mundane. I mean, wow. Really tremendous research here. And they continued with those silly points, which we're going to touch on in a bit. Then, troubled executives. Multiple board members and executives are associated with companies that restated financial results, adding to governance concerns. Then, evidence suggests revenue inflation, including a June 27, 2024 joint venture with SoftBank where both contributed around $95 million, with Tempus recognizing revenue over 2 to 3 years, potentially round-tripping capital. We've seen this happen also in the AI space with CoreWeave, with NVIDIA, with Microsoft, and all of those. Heavy use of Medicare billing code 81479, prone to abuse, is criticized for prioritizing revenue over patient care. TCV, or total contract value, includes $22.4 million in unlikely milestone payments and $200 million from related party transactions, raising conflict of interest issues. So let's talk a little bit more. Well, again, let's have a look at their wonderful, wonderful slide right here. So Tempus and SoftBank entered into a joint venture agreement May 24 to form SB Tempus Corp, a Japanese company owned equally by both parties, with each contributing approximately $95 million in capital. As part of the arrangement, SB Tempus licensed de-identified data and certain technologies from Tempus for 2 payments of approximately $48 million each, totaling $95 million, which Tempus records as deferred revenue and deferred other income to be recognized over the life of the agreements. The structure raises question about whether Tempus is round-tripping value through its cash flow statement, as the company invests $95 million into the joint venture and then receives nearly the same amount back in form of license payments, which it recognized as revenue and TCV, potentially boosting its reported financial performance with funds that originated from its own investment, which they explain right here. And yes, I agree, round-tripping is questionable. Like I said, we've seen this happen with some other companies as well. Everybody's calling it round-tripping. You might say it's just, well, company X investing in company Y using that money to buy products from company X. Going back to the second point that they raised, Tempus insiders connected to multiple financial restatements and questionable value creation. So they give us the 3 examples here: Groupon, Inner Workings, and Echo Global Logistics. So let's just look at the outcome here. Outcome under Tempus AI members: for Groupon, fail, share price down 95%. Inner Workings, fail, acquired for $3 a share, 66% below the IPO price. And the last one, Mixed, acquired in 2021 for $48.25 per share, up 244% from the 14 shares in IPO in 2009, but underperformed the DG Transportation Index. Okay, fine. Now, again, just because something happened with other companies in other industries a decade plus ago does not mean that it will happen again with a completely new company in a completely new industry, new age as well. Okay, some questions, you might ask them, fine. But again, the fact that this is already the second, maybe third chart that I've shown you, that looks quite childish. Again, here another one. Tempus AI doesn't appear to identify a correct age. On the left here, you have Tempus Hub, sleek and sexy, pre-IPO, late 2023, early 2024. Then you've got Tempus Hub, early May 2025. And they said the following: one of two of its external facing applications and its clinical application for physicians and other healthcare providers and used primarily in genomics product line. I don't even know if that sentence even made any sense. In showcasing its Gen AI feature, we are alarmed to see that the product incorrectly identifies the patient's age as 65 when the record shows the age to be 54. Then, in the next slide, it appears that Tempus demonstrated two different versions of its core hub products at the same time. While we assume that the patients are not real, but rather used for illustration purposes, we are alarmed that the software is so poorly constructed that it would allow two different birth rates for the same patient. Again, if this is a presentation, especially if it comes from a roadshow video, maybe this is done by Figma. Maybe, like they said here, this is just used for illustration purposes. Now, okay, if let's say they went to the system today and today they tried out and today there is a mistake, same person, two different age, okay, then you have a point. But this here again, shows me just how weak short seller reports are these days. They continue by saying the following: despite rebranding to Tempus AI, AI-related revenue was only $12.4 million, 2% of the $693.4 million total revenue in 2024, down from $5.5 million the prior year. Then as for the partnership with AstraZeneca and Pathos AI appear to be eroding, signaling operational pressures. Recent acquisitions of Ambry Genetics, DeepSix AI, and revised financial guidance suggest weakness in core genomics and data businesses. Financial performance here reported $803 million trailing 12 months revenue as of March 31st, but unprofitable with $6.91 of EPS loss. Again, we've seen plenty of companies that are unprofitable at first, still growing quite quickly, and then they become profitable. Now, with regards to Pathos AI right here, Tempus has a collaboration with Pathos for the development of a foundational large multimodal model in the field of oncology. Under the Pathos Master Agreement, Pathos is responsible for the development activities of the foundational model, and Tempus licenses a comprehensive de-identified multimodal dataset to Pathos to assist in this development. Pathos will pay Tempus the data license fees over a 3-year period, and Tempus will receive a license to use the foundational model upon its completion. Now, of course, you might say you call yourself Tempus AI, maybe you should have done it in-house yourself. Okay, maybe, but again, I don't see any issues with this. As for the 2% that comes from AI, that claim that they're making right here, right? 2%. Okay, big deal. They even acknowledged, I think they even said it's immaterial right now. But does that change anything, right? Is the focus so much on the name of the company? Yes, it's called Tempus AI. Okay, I agree. When you go from Tempus Labs to Tempus AI, the fact that you want to change the labs to AI, yes, probably means that you want to go and ride that AI hype. But from an investor standpoint, it doesn't change anything, right? The business, because let's say they didn't change, right? They were still Tempus Labs. Would you still make this claim right here? No, doesn't matter. And we've seen plenty of other companies out there that used to talk about SaaS, software as a service. Suddenly that disappeared and everything's AI revenue. And the market doesn't care. You know why? Because the market actually cares if you are growing, if revenue goes up, if you have free cash flows, if you're becoming more profitable, if you're growing, if you're taking market share. That's what the market cares about. Not the fact that, oh, you were called Tempus Labs, now you're called Tempus AI, but AI is only 2% of the revenue and that's why this whole business is a fraud. It just doesn't make any sense to me. Now, Tempus on Thursday responded on LinkedIn. It's a bit of a weak response, to be honest, because they say here the following: yesterday, so 2 days ago, we were the target of a small short seller that apparently makes its living publishing inaccurate content designed to mislead investors. We do not intend to respond through the media to a report that is riddled with inaccuracies, conjecture, and ill-informed hypotheticals, yet they do respond. It also fails to address Tempus' history of strong financial performance and impressive growth. We encourage investors to evaluate their track record independently. If you look at the last 5 companies they targeted, those stocks are up on average over 20% in the past 4 months. Okay, past 4 months is fine, but actually maybe look at the performance since they, released their short seller report. We are proud to stand by our results to date and will remain focused on creating shareholder value, delivering on the enormous opportunity of bringing AI to healthcare and helping patients live longer and healthier lives. Oh, and by the way, last quarter they told us for guidance. They are increasing their full year 2025 revenue guidance to $1.25 billion, representing approximately 80% year-over-year growth. The company also expects to be adjusted EBITDA positive for a full year 2025. So not bad. Not bad at all. They also talked about the AstraZeneca and Pathos partnership. The agreement brings Tempus' total remaining contract value to over $1 billion. Again, okay, they question the TCV value of this business. But yeah, I mean, okay, it is an expensive stock. It is one that is still unprofitable, but it's one that's growing fast. It's doing everything that it should be doing at the moment. Once, of course, let's say the bull thesis starts to, show some cracks, then we might say, okay, maybe this deserves a bit more scrutiny. But so far, I'd say so good. So far, I'd say the only argument I can say here is that the stock went up quite a lot just because of Nancy Pelosi. It's an expensive stock, and that's it. That's it. So what do you think? Do you think this was a buy the dip opportunity, still is a buy the dip opportunity, or there are some legit concerns? Let me know down in the comment section below. Hit all the buttons and I'll see you all in the next one. Bye bye.